Welcome to Trader UK, where we discuss money management and how to grow your wealth. Like and subscribe, leave a comment, you know the drill by now. I've actually received a comment today asking to show how to close a position in Degiro, which just means how do you sell your shares. So I thought I would do a very quick tutorial on how to do this, how it works. It should only take a few minutes. Before I start, this is actually a really important thing to learn if you are new to trading. Everyone wants to know how to buy shares, but nobody really thinks about how to sell, even though if you actually want to make some money, you're going to need to do this eventually at some point. I was actually caught out by this when I first started investing. I was holding some shares that increased in value, so I decided I wanted to sell them. When I went to sell them, I'd never really looked at it before, and I couldn't quite figure out the best way to execute the transaction, which way would be best, and the price started to drop. Of course, once the price starts to drop, it's human nature to think, I'll just wait a while longer for it to go back up, so you make the most profit possible. And again, of course, it never goes back up. So you miss your opportunity. And in that case, I missed my opportunity. So it's a great comment. And if you are new to trading, then make sure you watch this so that you can use it, even if it's at a later date. So once you're in your Degiro trading app, you can head to your portfolio section and you'll have to choose which stock that you want to sell. So I'm happy to run through one of mine. Let's pick the smallest position, Marston's PLC. If you go into the product details, this is probably the screen that you'll be familiar with. You can select the green button to buy shares in this, or you can select the red button to sell shares. In the bottom left-hand corner, it shows you how many of those shares you are holding. So I'm holding 400. Let's click on the sell button, and it takes you into the sell screen. Now, the market is closed at the moment, so you'll notice at the bottom here, some of the information is missing. The bid price, the ask price, the bid volume, the ask volume. Normally this would be during trading hours. You would have figures in here as well. Remember, the bid price is if you're selling, which we would be selling in this case, that's what you want to be looking at. That is the maximum price that buyers are willing to pay for one of these shares. So it would tell you there. And then the ask price is the minimum price a seller is willing to accept. So really we want to be looking at the bid price here. Bid volume, how many have been sold. Ask volume, how many have been bought on that day. And again, at the bottom of the screen here, you have your current position, 400 shares. So you can see we have a number of options when it comes to selling here. If we click on the limit drop down, you have 4 options: limit, market, stop loss, and stop limit. I'm going to work through them one by one and try to make it nice and clear how each of these work. So first of all, a limit order. The current price here is, let's use 33.68. And remember, this is in GBX, so it's not £33, it's actually the equivalent of 33 pence 0.68 per share. So these are like penny stocks. So 33.68 is the current price. Let's say I wanted to sell some of these shares. I can set a price here. If I was willing to accept 33 exactly for them, I can set a limit price, 33.0, and I'm willing to sell 100 shares, I can enter that here. That's going to sell for £33. So if that price is achieved, if someone is willing to pay 33 for them, it will execute that sale. At the bottom, you have 2 options as well: day order. Let's get the drop down. Day order or GTC. A day order is only valid for that day of trading. So if you place it at 9 o'clock in the morning, it will be valid until it is executed or until the close of play that day. If it doesn't get executed, if they don't find someone to buy it at 33 a share, then it will cancel off at the end of the day. Whereas if you select GTC, good till cancelled, and select 33 per share, that trade will stay open indefinitely until you cancel it or until it is made. So if it's not made today, it will stay open tomorrow, and so on and so on and so on. So until you cancel it or until it is made. Those are your two options on all of the sales. So that's a limit order. Nice and easy. You can set your own price. Then from the drop down, we have a market order. A market order is even more straightforward. If you want to sell your position, let's say I've heard some really bad news about Marston's and I just want to get rid of all of my shares. I own 400. So I enter the 400. Same options at the bottom, day order or GTC. And you click place order. What's going to happen then? They're going to sell the shares for you at whatever price they can get. The best price that they can get. But if it happens to be 30 or 28 or 27 or 25, whatever the market price is at that time, then it's going to be that. So you don't have any control over the price that you're going to receive. But if you desperately want to get out of a position, then you can use that order type. Or if you are trading very well known, very well traded companies, Coca-Cola for example, where you know the price is very steady, you can use that order type. Next option from the drop down, a stop loss order. A stop loss order can be used to manage your risk. So these shares are sat at 33.68 at the moment. Let's say I want to keep hold of them unless the price drops below 30 per share. So we can enter a stop price here of 30. And if it drops below 30, I want to sell 100 of my shares. Again, you have the option of day order. Do I want it just to last for today, or do I want it to last until I cancel it with the G to C order? In this case, I'll select day order. And what will happen, although it says 30 times 100 will generate £30, although it says that, this is going to be done as a market order. So if the price drops below 30, then they are going to execute that trade at whatever price they can get. It doesn't mean that you're going to get 30 per share for it. That's just the signalling point to try and execute the sale. If it happens that buyers are willing to pay 28 at that point, then you're going to get 28 per share. Okay, so again, you don't have control over the price that you're actually going to get for the shares. But if you want to get out quickly, it's a good way to get out. And again, some investors know when they buy a share, if it drops below a certain level, then no matter what, they want to get out of that position, to manage their risk. So you could always select G to C, and at any point in the future, if the shares drop below that value, then it's going to automatically execute a sell order. Okay, so that's the stop loss. And then the last option, stop limit, which looks a little bit more confusing. A stop limit order is pretty much the same as a stop loss order. However, you have a little bit more control. If you compare the two boxes, stop loss has one box for stop price. And then when you go on stop limit, it just adds in an extra box. So it's pretty much the same, but you have one extra box. So in this case, let's say I wanted to sell 100 shares. And our stop price, we said if it goes below 30, then I want to sell. But then you've also got a limit. So if it goes below 30, but no less than 28. So let's say they got some really bad news and overnight the share price dropped down to 25 per share. Well, the stop price of 30 has been reached, but it's going to look and see that you've got a limit order there of 28, and it's not going to execute that trade for you because it's gone below what you set the limit. So you know that if this happens, you're going to be selling between a price of 28 and 30. Okay, so it's a way of putting a limit on your stop loss. Okay, so again, once you get your head around it, pretty straightforward. I'm just going to show you as well, if I go back to a limit order and I select 10 shares, 30, 100 shares. When you place the order, it will take you through to the next screen, give you a little summary of it, and give you estimated fees as well. Once you click confirm on this screen, it will then either execute that trade or leave it sat there ready to execute. But that's it, simple as that. As soon as you hit confirm, it's going to run the process. I hope you found the video useful, guys. As always, hit the subscribe button, like the video, and leave me any comments for any other videos you'd like to see on the channel.